I guess. Or not even 5,
Okay.
probably
Are
in
you
the
sharing
next
a
2-3
screen?
minutes, since we lost some time now.
We
Not yet.
can go on till about 5. Do you Okay, guys, we're back. Sorry for
Let me share
that.
my screen.
We will, share screen. Sounds good.
Can you see the screen, Ariman?
Not yet.
Oh, really?
How many slides did you? Okay, we can see it now.
You can see it now?
We can.
Right. Okay. Okay, sorry about that. Let me just continue for the next couple of minutes, and probably that's all what will be needed. So let me just please, there are some numbers we did calculate for robo-advisory as well as for the insurance market as well, based on the number of policies that are getting originated online today, and then extrapolating it to what would be the number of account aggregator calls that would get initiated through an account aggregator to the insurance companies. So if you overall kind of compile all of these things together, you tend to get numbers. And like I said, these are just numbers from some specific domain areas, not essentially covering all the domains. And the numbers are still, I would say, very conservative. So if you look at it that way, over the next 5 years or so, you can easily expect over 1 billion account aggregator calls going from various FIUs into an account aggregator, and then from there onward into. Yeah, Ariman.
Sorry, just to let you know, we lost the screen again. But maybe what we can do is we can just kind of go on without the screen and upload the slides later, so people can check them out if that works with you.
Okay. All right.
And kind of do the rest of the talk
Can you at least
without
hear me?
Screen sharing. Yes.
Yeah. Let me just stop my screen share. You can hear me at least, right? Okay. All right.
Yes.
I'm sorry about that. I don't know what is the problem with the network really. These might look like kind of very large numbers when we talk about millions and billions over the next 5 years. But the testimony to this is really what is actually happening in UK. If you look at and we keep talking about these kind of initiatives taking a hockey stick sort of approach when it comes to volumes. So if you look at the first 1 year or so in UK, starting mid of 2018 to 2019, the growth wasn't very high. But now if you look at UK and a much smaller market in comparison with India, they already have about close to 450 million API calls going as a part of their data consent based data sharing initiative. So that's already a very large number, and just about 19 banks are participating today. About 150 FIUs in the UK context are just racking up these numbers, around 450 million API calls, and we are only talking about banking in their context. Whereas over here, like we spoke, it is open finance and not just open banking. So these numbers are very much realistic in nature, and especially if you project it out into the next 5 years, this should be a fairly big initiative, pretty much on the lines of what you see as UPI today. So let me stop over here and let me see if you have any questions, because I don't want to delay the next speakers. We have about 3 minutes to take the next set of questions.
Thanks so much, Salil. That was really great, and I think really exciting and important for us to hear. So just to kind of recap, if your talk, if I may, there are some statistics you gave on the conservative side by your own admission about the number of calls which could happen for account aggregators annually. And from a conservative basis, we entered about a billion calls a year quite soon in the future. My own estimates are a little bit more optimistic than that, and I see it being in the multiple billions per year. But one very salient point: the growth of open banking in the UK, and how with only banking data and obviously much smaller population, they've gone to about 450 million calls a year over there, and that's through the open banking channels. So there are also non-open banking channels in the UK, such as companies like Plaid and other traditional data aggregators who may be doing scraping and other things. So and in India that number could be much greater when you factor in the fact that we have many other kinds of data in addition to banking data. So very interesting. And just to give the audience a kind of perspective, so the way that the business model for this is unfolding is that account aggregators will charge FIUs, or the users of data. So they will charge them per API call. Today, a bank may pay like a tech service provider, a company like Yodlee or Perfios or someone else, for access to data. So the user will upload a PDF. The bank or the NBSC will take that PDF, give it to one of these data aggregators, and pay them for parsing the PDF, or going through the emails and SMSs of the customer, or doing screen scraping. And those costs can be quite high. So we see account aggregators coming in to replace some of those costs with more access to standardized, efficient, clean data, which is the same no matter whether it comes from bank A or bank B. There's one question about that actually, Salil, which Amit Gaikwad had asked, saying, in India, there's a cost of getting user data, whereas in the UK, TPPs can get free access to consented data from banks. So he thinks that the business model here will be difficult for FIUs to sort of pay account aggregators. What are your thoughts on that?
Yeah, I think no, that's a fair point. I think if you look at different businesses, I don't think this would hold true for all kinds of businesses. If you look at something like PFM, where you're just trying to aggregate data, then I think people may be unwilling to pay pay for that. But it's the onus is really on the FIU to create a model in a manner where they are able to still get the data at a cheaper cost. If you look at something like credit, right? In the course of disbursing a loan, the FIU in this context would pay something like 300 rupees at least to get data related to a customer today from different sources. And that is something that can completely significantly come down to what would be, let's say, 100 rupees or 50 rupees or whatever. And then, if the FIU is charged something like 25 rupees for that, that would make a lot of sense. So my own belief is that, cases where the cost of processing is high today on account of data sourcing, if you're able to bring down that cost and show the value, there will be money involved in this. But, admittedly, in some businesses, this would be difficult. So for PFM, as a business in general, it's very hard for them to generate money. And I think this was admitted even by Amit himself. But, the more they prove value by pivoting into other areas like financial advice and credit, and then you start charging for customers for that, it makes sense to pay account aggregators a part of that money that comes from the customer. If you look at the US market, people actually pay for financial advice. So, it's not a complete no-go at all.
Okay, please let me just add a couple of 2 cents to that very quickly. So great question, Amit. And I think that, for PFM especially, there's a high sort of cost of trust. So when you're kind of getting the user to give access to SMSs, emails, things like that, there can be a drop off. If the price of getting this data can be seamless, I mean, the price can be low, the experience can be seamless, and we're talking about prices which could be a few rupees per month, then that could be economical for PFMs, even with their current business models of originating products, etc. So we don't actually have much time left. We have our next session, which was due to begin at 5 p.m. But there's some really great questions in the chat. I'd like to just read some of them out, and maybe we can take them offline and discuss them further afterwards. Questions about how account aggregators will solve the accounts payable and receivable balancing of businesses, and views on the scope for independent underwriting modelers, which I think is a fantastic question. So unfortunately, we'll have to come back to take these questions another time. But Salil, I really thank you for this masterclass. It was really educational, very helpful. And audience, if you agree with me, please spam the virtual emoji for our esteemed speaker. Thank you so much, guys. Ladies and gentlemen, that was Salil Ravindran, Head of Research and Advisory.
Thank you so much. My apologies for the...
No, not at all. Not at all.
Yeah, I would have liked to cover, a few more slides. But yeah, thank you so much for everyone's participation. Thank you. Thanks, Ariman.
Thank you very much. So, guys, we'll be back in 2 minutes with Kunal Shah and Sumit Golani for our next session. So please just hang tight for a couple of minutes, and we'll be back. Thank you, everybody. Thank you, Salil.
Thank you.